Hi everyone, welcome back to Corporate Decoder, the place where we dig through the corporate filings so you don't have to. Today we're cracking open a Form 8K from Interactive Strength, also known as TRNR, and let me tell you, it's a bit like finding out your gym membership just got more expensive. But maybe there's a discount hiding in the fine print. Let's see what's going on. This report is dated April 18, 2025. This is when something important happened that the company needs to tell the Securities and Exchange Commission, or SEC, about. This is like a quick update, not a full financial report. The main point of this report is about an agreement the company made. This agreement is important. It's considered material, so they have to tell everyone about it. It has to do with some debt they have, specifically a note purchase agreement. Think of a note as an IOU, and this one is convertible, meaning it can be turned into company stock. So Interactive Strength, that's the company, made a deal with CLMBR Holdings LLC and Treadway Holdings LLC. Basically, they sold a special type of IOU called a Senior Secured Convertible Promissory Note to Treadway for $6 million. This note can be converted into shares of the company's stock. The note has been changed since then. It's been amended and restated at some point. Back in March of 2025, this note had a price for converting it into stock of $2.57 per share. At that time, the note was bought by a company called TR Opportunities 2 LLC. We'll call them the current holder. Now fast forward to April 18, 2025. The note has about $1.9 million left on it, and the company CLMBR and the current holder made another agreement to change the terms of the note. The main change is to lower the price at which the note can be converted into stock down to 1.10 pence per share. That's a discount from what it was before. So what does this mean? It means that the person holding the note, the current holder, can now buy shares of the company at a cheaper price. It's like a sale on company stock, but only for them. This could be good for the current holder because they can potentially make more money if the stock price goes up. If you want to read the full details, you can check out the letter agreement that's filed as an exhibit with this report. It has all the fine print. This section talks about selling stock without registering it with the SEC. Usually when a company sells stock, they have to register it first, which means filling out a bunch of paperwork and following certain rules. But there are some exceptions. In this case, the company is saying that the shares they might issue when the note gets converted are exempt from registration. This is because they're using a specific rule, Section 389 of the Securities Act of 1933. This rule basically says that if you're exchanging one security for another with your existing security holders, you don't necessarily have to register it. In this case, they're exchanging the note for shares of stock. Finally, the report is signed by Michael J. Madigan, the Chief Financial Officer of Interactive Strength. This means he's responsible for the accuracy of the information in the report. Now let's step back and see what this all means for Interactive Strength. Lowering the conversion price of the note might sound good because it could get rid of some debt, $1.9 million to be exact. However, it also means that if the note is converted, more shares of the company's stock will be issued. This dilution means that each existing share of stock will represent a smaller piece of the company. The pie stays the same size, but it's divided into more slices. So while it removes debt, it also means current shareholders own a smaller percentage. Also, while it seems like the current holder is getting a good deal, it could also be a sign that the company is having trouble raising money in other ways. Why else would they offer such a discount on the stock? The fact that this note has been bought and sold a couple of times also raises some questions. It makes you wonder if the initial terms were that attractive and why it needed to be amended. It could mean something about the company's prospects and its ability to manage its debt. Interactive Strength is still an emerging growth company, which means they're a smaller company that's still growing. They face a lot of challenges, especially in a competitive fitness market. These include managing their debt, raising money, and attracting and keeping customers. In conclusion, this report shows that Interactive Strength is working to manage its debt by making it easier for a note holder to convert their debt into equity. It comes with risks, particularly for current investors. Keep an eye on the financials, debt, and overall strategy. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. What company should we decode next? Let me know in the comments.